So, for the life of me, well, let's not be dramatic. I do find it interesting that people don't see high production value and therefore think there's no informational value. Well, there's good reasons for that. Hey, buddy, how you doing? Part of it is sometimes there's not high production, and yet there's still high information value, right? You need to know how to suss out low quality information from high value information or high quality information. To suss out means to sort out, to parse the difference between, right? To work out the difference. So anyway, it is a week, and as you probably know, if you turned into this thing and you haven't gone and run off already by now, then what you're looking at is not the Bitcoin chart, and is not me reading you information from the volatility indicators or the entropy indicators or the probability indicators or the statistics indicators. Well, what are you doing then? Well, I'm going to tell you about what happens when it's weekend at Bitcoins and you sit there looking at the VEPS charts. What are the VEPS charts? I just told you. And you look at the VEPS charts and you wonder why even on a day that's basically a trending day, as Saturday was, the 1st of June 2024 was, it was a relatively tight central daily range on the VRE, well less than 1% of the asset's value. So why, when it should be a trending day, didn't we see any big trending moves? Well, the answer's in the question. You don't have to see trending moves just because it's a trending, like a big trending moves, just because it's a trending day. You can have effectively a flat day, which, if you zoom out, the 1st of June 2024 on Bitcoin was a flat day. For the reasons that are very clear to anybody who knows how to read the VEPS. And those reasons are simply that even though there was a tight central daily range on the VRE, right? So the probability is that it was a trending day. Well, there were small trending moves on like the 1 minute, the 3 minute, right? Even tiny ones on the 15 minute. But that's it. And you don't need to have massive trending moves, right? If you're like a really low time frame scalper. And you got to remember that indeed a lot of people, 20% or more of the market takes weekends. They're human beings and they work normal 9-to-5 jobs, right? When I say 20% of the market, of course, 100% of the market is owned, quote unquote, by humans, but 80% of the trades actually are done by robots, right? High frequency trading bots and other robots, but mostly high frequency trading bots who run the overwhelming majority of trades, right? Everything else is just like, details. But that everything else makes a huge difference in some respects, right? So for example, if on a day like yesterday, it's mostly bots running around trading, and there's, for whatever reason, not that many humans busy with the trading, because they're busy doing whatever, who knows, other stuff, okay? Then when the bots don't see a lot of action, They don't see a lot of returns happening because they see that either their human handlers, the humans that manage the buttons and make sure that everything's running smooth, basically put them in low speed mode, low speed trade mode, or running a program that basically severely limits their trade numbers. Well, then that is one condition that can affect the overall number of trades happening on the market. And when you have that, then you're going to have, obviously, an impact on the VEPs, right? Because the volatility is going to be lower and the entropy is going to be lower, right? So the probability and statistics that there will be significant moves are also lower. It makes a lot of sense. It's a whole heap of sense, in fact. So that's why on days like yesterday, one of the really best things to do, and we saw it coming already since Friday afternoon, to be honest, but one of the very best things to do is to step away from the keys and go touch grass. Now, does that mean you can't make gains even on a day like yesterday? No, it doesn't mean that at all. You definitely can make gains. It may be more challenging to you if you're not used to trading down in the 1 minute time frame, right? But if you are, well, the 1 minute time frame is kind of perfect for a day like yesterday, right? Because that's where the actual action is happening. That's where the returns are running around. That's where the volatility is still happening. By the way, it could also be the 3 minute if you're more comfortable with that. But there's definitely, or 6 minute or whatever you prefer. Like, I'm just saying, the lower the time frame, the more you're going to see. And I know there's people who try to trade sub 1 minute, whatever. If you're doing it with the VEPs, okay. If you're doing it with lagging information, I don't know what to tell you. Thank you for being the liquidity on the other side of my trades. But whatever time frame you're trading, if it's low enough, you'll see. If you have the VEPs indicators, you'll see there's entropy. There's trending moves on entropy happening every day. It's just that yesterday was a good example of when on the higher time frames, it seemed like there was nothing going on. But if you look on the lower time frames, it was just going back and forth, back and forth, back and forth. Which, to be honest, is kind of an ideal trading situation if you're a low time frame scalper. Right? If you like to trade slightly higher time frames and you want to see more gains per candle or whatever, or more losses, more pops or more drops per candle, then yesterday was a really good day to go and touch some grass, right? Now, how would you know that? Well, how would you know that in advance? Well, you could see what was happening on Friday. If you listened or watched the Alpha Trading live stream, you would have known that it was likely to be a pretty flat Saturday. And in fact, after our live stream ended on Friday, after the motion stopped, right, like pretty much the back half of the day on the traditional markets and on Bitcoin ended up, in terms of the time that the traditional markets was open, once we reached the back half of that day, the action was already starting to slump down significantly on Bitcoin and kind of settle into a weekend mode. And it took the rest of Friday and pretty much all of Saturday off. Now, does that mean there was absolutely no motion? No, of course there was motion. Right? But for people who were looking for, big moves or whatever, no, it was chill. It was a chill day. And to be honest, again, like I said, if you're a low time frame trader, the chill moves are the ones you want the most in many ways. Why? Because they're way more consistent and reliable. Right? If you look at a 15-minute candle And it's just going one up, one down, one up, one down, one up, one down, and they're roughly the same height constantly. What that's telling you is that on the 1 minute, and you can look at it easily to confirm for yourself, or on the 3 minute, you can see you got these little hills going on. It's running up, running down, running up, running down, running up, running down, and roughly the same amount constantly. Which means you can run trades that are going back and forth consistently all day. How is that helpful? Well, it's incredibly helpful because it means you know where you can enter and exit very reliably. And of course, at some point, it could make a move and break out of that. And there were, like I said, even on the 15-minute, there were a couple of, trending moves. But they were small relative to a Bitcoin, busy Bitcoin day when there's crazy trending moves. Right? $100 here, $200 there, $300 there. When you're talking about a $70,000 asset or a $67,000 asset, that's nothing. It's not even 0.5%, right? But if you add up those 0.5% gains, going up, going down, going up, going down, going up, going down, at the end of the day, you can make some nice percentages. You make 1%, 2%, 3%, 4% gains in a day on a slow day. To be honest, that's really awesome. People don't appreciate the power of compounding your gains over time. Even if you make just 1% a day, right? Stack it up over a month. By the time you get to your 30th day, that 1% that you make on day one is tiny compared to the 1% you make on day 30. Now, of course, a lot of traders will have some losing days if they're, if they screw up something or whatever. But if you are trading the VEPs properly and you're running a whole bunch of trades every day, or however many is right for the way you trade, the number of losing days you should have is extremely small. And if you're not, then you're probably doing something wrong. I mean, beyond the obvious. You lost the trade. Like you're probably reading the information wrong or taking the wrong action. How do I know that? Well, because the information is correct most of the time. So if you're using the information, when I say most of the time, I mean the absolutely overwhelming majority of the time. We just don't say 100% because if it's ever not 100%, oh no, liabilities or whatever. But it's pretty much always correct, except for the rare, very rare occasions when it's not. Unlike traditional TA, which is either wrong, most of the time, normally, or in the very best cases is wrong, just a good healthy chunk of the time. So, like I said, you got to choose your high quality information. And that's exactly what the VEPS is. So if you want to learn it, you just head on over to the old Alpha Trading Discord and get yourself the free volatility starter kit, including the free volatility starter chart, free education, free access to the chats, free access to the live streams, all that and more. All that in a bag of bags. So alphatradinghq.com/discord. That's where you go to get it. Just go to alphatradinghq.com/discord and follow the instructions. All right, that's it. Happy trading.